Welcome to this GEPL Capital Explainer. Today, we're not just talking about getting lucky and picking a few random winning stocks. No, we're talking about mastering the overall architecture of your wealth. We're going to dive right into exactly how you can optimize your market returns by consistently playing with strength in the Indian stock market. It's time to build a genuinely robust financial foundation.
So let me ask you something, and I want you to be brutally honest with yourself here. Are you just sitting there watching your portfolio returns bounce up and down? You know, it's a surprisingly common trap. A lot of investors just passively watch their rupee investments fluctuate day in and day out, month after month, without ever taking any strategic action. But let's be real. Passive observation simply won't get you to your long-term financial goals. We really need to challenge that habit today.
Section 1. The Portfolio Checkup.
Think of your wealth exactly like your health. I mean, you wouldn't just skip your annual medical checkup, right? Well, your investments require that exact same kind of systematic review to make sure everything's actually functioning correctly. A portfolio review basically evaluates if your current holdings still align with your changing risk appetite and your ultimate investment objectives. You're essentially verifying whether your investment strategy is keeping pace with current market trends or if it's falling completely behind. This is all about a major mindset shift. You're moving away from being just a passive spectator of your returns, which, frankly, is a dangerous habit, to actively ensuring your portfolio is built solidly. A systematic checkup ensures that every single rupee you invest is purposefully driving towards your long-term goals.
Section 2. Anatomy of a Review. So what does a comprehensive checkup from GEPL Capital actually cover? Well, first, we systematically revisit your foundation. That means your core goals, your strategy, and your specific time horizon. Then we really look under the hood at your asset allocation. We objectively measure your performance against actual market benchmarks. We evaluate your risk and diversification to see if you're dangerously overexposed to certain sectors. And finally, we put together a crystal clear action plan to move you forward.
Section 3. Fixing asset allocation.
Now, one of the biggest superpowers of a regular review is rebalancing. Market movements can incredibly easily skew your intended risk profile over time. Like, imagine if gold goes on a massive rally. Suddenly, it might completely dominate your portfolio, right? That exposes you to a completely unintended level of risk if the trend suddenly reverses. Regular, disciplined reviews help you trim those oversized positions and restore that absolutely critical balance across equity, debt, gold, and cash.
A review also forces a really vital performance evaluation. On one side of the coin, we assess if your investments are actually meeting expectations, so you can decisively cut the underperformers, basically the dead weight, before they severely eat into your returns. Holding on to losers just traps your capital that could be working way harder elsewhere. On the flip side, we identify the clear outperformers so you can actively increase your exposure to those winning assets.
Section 4. Risk management and taxes.
Beyond just chasing gains, a review is quite literally your primary defense for risk management. Why? Well, because your life and your risk tolerance naturally change over time. For instance, if we're nearing a volatile market turnaround, you might need to protect your hard-earned capital by shifting from equities to safer debt instruments. Regular reviews make sure these timely adjustments actually happen, so you're never caught off guard or dangerously overexposed when market dynamics shift.
And guys, we absolutely cannot ignore better tax planning. It's a strategy so often overlooked by retail investors. Conducting a portfolio review, especially right around tax season, lets you strategically harvest losses. By intentionally offsetting your winning investments with your losing ones, you legitimately reduce your overall tax burden. By making planned switches across different stocks and bonds, you can significantly drop your tax drag in rupees, which means keeping far more of your own money working for you.
Section 5. Riding market leaders.
Volatile markets are constantly creating incredible new opportunities in emerging sectors or undervalued assets. Instead of just holding on to dead sectors out of pure habit, regular reviews free up that trapped capital. By analyzing relative strength, which really just means finding the specific stocks and sectors that are actively outperforming the broader market, you dynamically concentrate your exposure exactly where the money is actually flowing.
Section 6. Play with strengths. Every successful review has to result in a clear, decisive action plan. You trim the laggards, you rebalance your allocations, you deliberately shift your capital across sectors and stocks that are showing real momentum, and you adjust your risk levels so you can actually sleep peacefully at night. This actionable plan ensures you're always allocating capital with a strong edge, moving perfectly in sync with your financial goals. It all comes right back to the core GEPL capital strategy. Doing regular portfolio reviews helps you to improve returns while successfully controlling your risk. By purposely focusing your investments on strong industry groups and the strong movers within a sector, you're actively maximizing your upside potential while keeping that downside risk on a very tight leash.
So, I'm going to leave you with this final, crucial thought. Are you ready to stop just passively watching your portfolio bounce around and start actively playing with strength? Every single day you wait is a day of missed optimization. Thank you so much for joining me in this explainer. Partner with GEPL Capital, stop watching, and start taking definitive control of your wealth today.